How do you try and encapsulate, what is the ethos behind Antipodes, and what was the drivers behind setting up the firm for you guys?
We thought ultimately we could refine that philosophy in the process, and we describe it as pragmatic value because it's an awareness around all sorts of different types of changes that impact businesses, long-term structural change as well as cyclical change. I think that's different to conventional value that generally anchors to mean reversion or just cyclical change. We're really looking to build high conviction portfolios that wherever we possibly can, don't have massive style or macro bets, or only have ones that we think are constructive, i.e. they're cheap and they're timely. So that requires a performance culture. So you need your analysts, you want to attract talent that wants to be paid for performance. And so, my role is really about, talent management. We use the sector teams and sector shadow models as a way for each of the teams to collaborate within the team, so they become prioritization machines. They are focused on the best ideas, the most prospective ideas in their sectors, and that those ideas then come through for consideration in the final portfolio. And the quant and macro tools that we've evolved. Look, I think fundamental investing has increasingly become quantamental, and we were, I think, relatively early in that process, and have continued to invest heavily around with quant tools around the fundamental stock picking process.
At Zenith, we know that Antipodes is all about value, and obviously for a number of years value's been really challenged. It's been very difficult in very strong bull market conditions to operate under those conditions when growth is rampant. So looking forward, how do you try and navigate these challenges, and how have you guys been tracking?
How do you navigate that as a pragmatic value investor? Well, I think ultimately you're looking for growth and quality, but looking for it in maybe less obvious parts of the market. And at the moment, I would argue that's in some of the more cyclical sectors. Companies like Siemens or GE that are priced like cyclicals, but are actually, have exposure to secular growth and have dominant businesses that are exposed to secular growth. I think the biggest risk in portfolios today is there's so much crowding into growth at any price. People are not considering the underlying quality of the business. And in some cases, there's a lot of imitation taking place rather than disruption. Some of the high-flying tech stocks, when you scratch the surface, we struggle to see, what the final margin, anyone can grow if you're willing to buy market share. Now, when capital markets become more discerning, we think some of those businesses won't stand the test of time.
Obviously, at the moment, we're living in challenging times. We've got, geopolitical issues. We've got the rise of populism. We've got, potential turning of the interest rate cycle. We've got an aging bull market. What are the themes that you guys are sort of seeing short term that are going to perhaps prove challenging in these environments, and how are you guys positioning yourselves accordingly? What are some of the real high points that you see?
You can potentially have an earnings recession, and because you've had such a strong period of tailwinds around low rates, tailwinds on fiscal stimulus in the US. And at the same time, you've had this very easy money, corporate bond markets have been willing to fund venture capital, fund startups, private equity has been incredibly aggressive. It's actually a relatively toxic mix. You're living through some of the most technologically disruptive, innovative period in history. But the funny thing is, no one seems to be going broke. The Fed, has this mantra, we won't let the US become Japan. They are, in their policy, creating that because weaker companies are not going bankrupt as disruption takes place. The success of Amazon, all the FANGs, is inexorably putting pressure on these, let's call it incumbents, who have not focused on innovation, have borrowed money, bought back stock, haven't had margin expansion. So you're getting closer and closer, I think, where half of the US stock market is really at the beginning of a very severe earnings recession. Now, those stocks in other parts of the world, the domestic-facing part of the US market, the domestic-facing part of Europe is 30% cheaper. Now, some of the pressures are the same, but I think you can be selective and find stocks that they're cheap, but they're not value traps. And that's what our focus is on. We're looking at some of the FANGs are not necessarily all equal. That's I think it's time to be selective with the growth stocks. We own Facebook and Microsoft. I start to struggle with some of the other large cap tech stocks, just with the valuations, and certainly the smaller ones who are imitating what the large guys are doing. I think they're just straight shorts.
So maybe, Andrew, turning around to you, just to talk about the listed investment companies specifically. So obviously, at Zenith, when we're dealing with listed investment companies, we know that by virtue of the structure that they can trade away from their net tangible assets, and the Antipodes LIC, is currently trading below its stated net asset value. So just a bit interested to understand, your viewpoints on what some of the drivers of that might be. We know that, for some of those LICs that used to issue options, sometimes there were effects coming out of that. But what is Antipodes management and also the board, I suppose, really focused on in the short term to try and help address that issue?
From the manager level, we see that as an opportunity. Antipodes, the manager, and various individuals associated with the manager have been buying shares in APL. What is already what we consider from an investment strategy point of view a very attractive portfolio of global companies. Trading at below their NTA is an attractive opportunity, and surely there are other investors out there who are also taking advantage of that right now. From the company perspective, when you see the shares trading at below NTA for a prolonged period, it's only prudent for us to launch a buyback as we've just announced. Add to that just other measures we can do collectively, a lot of communication to investors about the value we see inherent in our portfolios, getting much more front foot in unearthing new investors. Ultimately, it's a game of finding more buyers than sellers, and that requires a lot of communication, transparency and engagement, not only with end investors but also with intermediaries like financial planners and brokers, and we do that together with our colleagues at Pinnacle who support us on that front.
Thank you, guys. Thanks very much for joining us on this Q&A session on the Antipodes Global Investment Company. Thanks everybody for watching.